Hi guys, welcome back to another weekly analysis video. In this video, we're going to talk about Nifty's price behavior for next week, and we will connect the price behavior with OI. This time I have something special for you, something very interesting. Many of you might have not heard about connecting intraday price action with OI analysis. I'll teach you something new in this video. But before that, what are the major narratives that was set in the last week? The first weekly narrative, the weekly story, which tells us that the US India trade deal is further scheduled for the previous week, the last week, but we don't know really if it happened or not. This is an ongoing discussion for a long time. Trade deal will happen, will not happen. This is what stopped the market from falling, is what is the narrative. The next narrative, the next story is that there was a major escalation and de-escalation in the US and Middle East situation. US was preparing for an attack on Iran, but it was suddenly called off. This directly impacted the crude oil prices. If you look at the chart here, this is crude oil futures. What happened here was, on expectation of an attack, the market was rallying. The crude prices was rallying all over the world, global. This is crude oil of MCX chart. Then when the attack was called off, suddenly the next day market dropped down nearly 4% fall in the crude prices. Why does this happen? Question here is why did the prices of crude rally when there was an attack going to happen? The reason is very simple: supply. So Iran is one of the nations which supply crude to the world. When you attack, or if they're affected, the supply is broken, this will increase the price of crude oil around the world. So supply side issues will increase the prices of crude oil. That is why it was rising on expectation of an attack. And then when the attack was cancelled, the supply side, there was no disruptions, right? So there was no disruptions and nothing else happened. Now some domestic cues. We started the quarterly results, stock quarterly results calendar season right now. And the first story is that the DIIs have been buying, they have been absorbing the selling which the FIIs are doing. The major narrative is that PSU banks, a lot of sellers were there and the DIIs absorbed them. PSU's banks rallied nearly 6%. If you see the major stocks which rallied in PSUs was SBI, which jumped nearly 5%. Bank of India and PNB jumped nearly 9 to 10% movement was seen in these stocks. The truth is, if I just zoom out and show you PSU banks, even if this news has not come, even if the story did not come, PSU banks were anyway going to break out and go higher because they're already in an uptrend. This is a clear sign of continuation pattern. So this narrative building, the story building, is just maybe, some sort of a excuse for buying this. A 6% rally suddenly when the entire market is dead is some anomaly. Next, we have the IT pack. IT pack jumped on Friday, the Nifty IT index, along with its major stocks, nearly 4% or 5% rally in the last session. But before I get into the chart of Nifty IT, I just wanted to tell you that Infosys on Friday itself, the entire movement was 7% of the week, but on Friday itself, it moved 5%. Tech Mahindra total movement 7% in the market. Now, be careful, like I said, in this sector again, don't blindly believe the news and don't follow, don't chase it. Because if you look at the pattern here in Nifty IT, this is sort of an ABC pattern which has emerged from this swing low. This is an ABC pattern. Now, this pattern can trigger a small or choppy rally, or it can continue its correction. So this is just a sharp pullback in a rally. Sorry, this is a sharp pullback in a bearish trend. So bearish phases, correction phases give sharp pullbacks. That is also possible. So those who are investors, keep that in note. Study the stock properly, check the price action, and then make your own mind up. Now, before we go on to Nifty, we have HDFC Bank and your Reliance Industries. They both have posted their results. I don't really mind what results. I don't really follow the track, the what results they have posted. My only question here is that let me know your thoughts whether they're going to rally further or they're going to fall further, because HDFC Bank has already fallen 8% from the highs. Reliance has fallen nearly 10%. So what are your thoughts? Let me know in the comments. Let's look at Nifty now. You can see that last week there was not much movement apart from the first 2 days. On the first day, we had your Monday. Market bounced exactly from 25,487 level. So what is there at 24,000? Sorry, 25,487? In the monthly video, the strategy video, I found out and I showed you how to find these key levels using your monthly OI before the month starts. Market respected that. It was almost like an algorithmic buying in the market. So as soon as that level touched, immediate buying came in the market and then it paused. So it's like someone's break even level, someone's strategy, big player strategy, it got triggered. They put some SL, it got triggered, and then immediate reaction in the market. Or this is nothing but a profit booking. All right. So if you look at this chart of Nifty, it was completely sideways. And on Tuesday, the expiry day, at this point here, market had not moved much. A big spike and then fall. It was going sideways here. At this moment, I told you somebody was building shorts and price is stuck in a range. Immediately, the second half, we saw a good fall in the market. So this is something learning you must understand. Before the move comes, the big players, they make their positions. Why does this happen? Why does this phenomena happen is what is my research. This is something which I want to find out. Why do big players make the position before the move, and then how does this move come? That is what I want to find out, and this is an ongoing research. As soon as I find it, definitely I will share it with you on YouTube for free on Friday. Now this is the entire game. Before that, before we go into Friday, just price action wise, if you see, this structure is nothing but an ABC pattern. This is an ABC, another ABC pattern, and then price is on the downtrend. There was a pump and dump on Friday, right? So this entire overall structure so far to me, it looks like an ABC pattern. And once this C leg is finished, market can go up once. So it depends on how deep this C leg comes. If it comes all the way to this point, if it comes all the way to the support zone here, what will happen is market will go either internal range liquidity and stay in this range till your 22nd or 23rd, and then it will decide again. So keep that in mind. Price action next week is very, very important. If there's some, let's say, a sad news or a bad news or whatever, it can trigger a massive fall. Question is, can we go further, like a slow grinding move? That's also possible. Sometimes grinding moves like this can happen. A slow pullback like this, again a grinding move, this is also possible. But overall, right now at this moment, it is most likely that 25,880 or 900 level, this has to be tested once again, because this fall was a three wave pattern. So far we have quite small idea. We have an idea that yes, price action says regardless what happens, this upper range is likely to be tested once. What we're going to do right now, what I'm going to do is, we are going to go to the OI analysis, and then we are going to find out some data point where we can validate this price action. Okay, go to the open interest. Again, this is the open interest which I've been telling you for a very long time, past 4-5 videos. Just watch it in order. Every video there is something new to learn from the January month onwards. So watch all the videos, weekly analysis videos. What I'm doing here is that I'm going to the open interest tab. I'm selecting the date. What did I teach you? Whenever you want to analyze, start with the monthly expiry. Recently someone asked in the comment section, why are you selecting monthly expiry all the time? The reason is very simple. Once you go, if I just remove monthly, I'm going to remove monthly expiry, and I'm going to select your weekly expiry. I'll show you something. When I take the weekly expiry, there is so much noise. All right, there is so much noise so that you cannot figure out what the big players are trying to do. When you go to the monthly expiry, there's a very clear movement in price. And one more thing is something called slippages. Slippages is something that happens to people with big quantities, and big players always take big quantities in hundreds and 500s of crores of rupees. You're not like 10 lakh, 1 lakh, 5 lot, 10 lot. They trade in thousands of lots, thousands, 10,000, 15,000 lots, huge quantities. FIB, DI, all these big players, huge quantities. So they cannot use weekly as a good entry parameter. They cannot play full time weekly because there are huge slippage. If they place an order at 100, sometimes it will get triggered at 105 or 110 or something like that. These kind of slippages are for them very damaging. Every rupee counts for them because they're using huge quantities of money. Okay. Anyway, so these slippages are most likely happening in the weekly. That's why they shift mainly on monthly. They focus only on monthly. Your weekly is for them, they get active near the weekly expiry. It's for play, so fun most of the time. Okay, keep that in mind next time you think about analyzing. Now what we're going to do is we're going to select January, your 27th monthly expiry. We are going to go to date last week Friday. What are we analyzing is that last week Friday, how was the data, and today, that is the most recent session on 16th, how is the data. Okay, so we're going to go to 9th first. This is the data of select the expiry 27th of Jan. What I'm going to do is I'm going to highlight some things. I'll just draw this graph for you so that you will understand it better. I'll draw this graph line graph style and then we will compare it. Okay, so this is the important graph so far of your put side. I'll do the same thing for call side now. Sudden spike here. This is a very, very simple and easy visualization method. Done. So this so far I have drawn on the 9th of, this is for your 9th of Jan. Okay. Now I'm going to change the date. I'm going to go to 16th Jan, select the correct expiry, and now we'll see. We'll see the difference of what happened here. This was the exact measurements, right? First thing you can see, it is very, very clear that your red color, this point has increased, correct? This was the previous week. There has been an increase in OI here. This is almost same. Everything else is almost same. Small increase here, small increase here. This is same. Okay. So 26,000 call OI has not changed at all. So those who are holding 26,000 shorts, the big players, have not changed much. Here, there is a small fall. The blue color, that is nothing but your put OI. 26K. Put OI, there is some fall. But overall, you see a put side, there is some build up. OI build up. What does this mean? It means that the big players so far, they in the monthly expiry, regardless if the fall comes, if the fall comes also below 26,000, they are ready, they are protected. Okay, try to understand this point very clearly. OI has been built up in the put side. Price has not moved. Okay, I'll show you here again. 26,000 is over here. Let me zoom out, it'll be better. On the monthly expiry, the price so far is in a range this week. The OI of the put side has been increased. Put OI has increased. What does this mean? It means that put shorts. What does put shorts mean? It means bulls. So there was bullish bets or bullish buildup happening when this price is going sideways. This can change in a single day if there is news event or something happens overnight. But so far, this is the data we have. Does this support our price analysis? What is the price analysis we had? I told you the upper range has to be hit once again. There is a chance upper range can be hit. So this is one price data. So this is one OI data which supports us. What is the other data we got from this OI analysis is that call side has not moved much. Call side unwinding or something that has not happened. So call side, there is still players active in the market. They don't mind if price comes higher. They don't mind if price comes higher. So basically, there is being a slow methodical range being built up in the market. All right, keep that in mind. It's very, very simple. Going forward, you can decide what kind of strategy you want to build. Now, let's get to the fun part. This is something new which I have never spoken about and I have not talked about. I'm going to show you intraday price action and how to study OI with it. First, we'll take the date of Friday. This is something which is unusual which happened here. Friday, this is the start candle. I'm taking a 5-minute chart. Does not matter what chart you take, what time frame. Top was made around 1040. All right, 1040 was the top. Let me mark it here. 1040. Okay, 1040 AM was the top. Sudden fall came here and this point, which is 1225. Okay, important time zone, we'll mark it. 1225 on Friday, we had a good fall. The swing low candle was made on 125. Okay, we'll mark that also. 125 was the swing low candle. Done. Now what we're going to do is very simple. We are going to go to change in OI. OI change here. The tab is here. OI change, and then we're going to intraday. We're taking the expiry of 20th Jan, most recent expiry. All right, the weekly expiry. Here you see that overall there is change in OI. You can see that there is change in OI, and we are not checking the OI total. This is total OI. Show OI total. I'm removing that. Only changes in OI. Okay, we're just seeing the changes in OI. First thing you must note, how did the price behave? First, it was rallying, right? Price was rallying till 1040. So 9:15, 1040 rally was there. Good. We are going to put the time here. So 9:15, and then we are going to select till 1030. Okay. Done. This is the change in OI of weekly expiry. Till then, you can see hardly any shorts build up. Total puts were there in the game. So put OI short. Put OI shorts. What does this mean? It is bulls. Yes, it's very clear. Price action also was on top. You can see price action also rallied non-stop. Pulls were there. Very good. Now what we're going to do is we are going to shift to this time zone. 9:15 all the way down to 12:25. Okay, we're going to do that now. Totally, we're going to take this fall also till here 12:25. So it is 12:30 basically. Okay, till this candle. So we'll go to 12:30 now. We'll increase the time to 12:30. Slowly you can see the short slowly building up. Now, so far you can see that till 12:30, the bulls are still active in the market. What did the price do? There's a good build up, slow build up here, good ones, no problem. Here, bulls are still there in the game. This fall came and bulls are still there in the game. So far, what do people think? This fall has come, shorts are entered the market, so on and so forth. But no, intraday, the bulls which came on that expiry, they are still active. Okay, this fall has triggered, swing low has broken, still bulls are active. Then what happens? I'll show you. This is something unusual, right? Now we'll go all the way to 1:25 p.m. 1:25 is where we got the day low. Okay, 1:25 p.m. is where the day low was formed. Let's go to 1:25. Okay, again till 1:25, 25,700 put option was 1.5 crores of OI was still there. You can see market has reached day low. Market has just reached day low. It has just hit like this and it has gone up like this. Sharp reaction on this candle. So I'll just remove this timestamp. You can see properly. You can see that market gave a fall, sudden sharp reaction, and then it was holding. This entire range was held here. What happened here is the question I'm going to ask you. What happened here? People will never see this. So far, from the bottom, made a high, market made a new bottom. Bulls are still standing at 125. You can see this. Bulls are still standing. Bulls are there in the game. What happened after 125 to 315? 125 to 315 is what I'm going to show you now. Before that, let us just go back to the chart again. I'll remove this and I'll mark something very important for you. This was a previous gap. Right? This was a gap created in the morning. Simple. You can see this gap, this area. Sometimes players or algos or whatever, they use gaps as support and resistance. Intraday players, some players, they can use it as trailing stop loss or whatever. Price, what did it do? It breached this one candle. Somebody's bull's stop loss got hit. What happened after that? Market goes dead sideways. In this range only, market goes sideways. Now, what do we need to see? Did the bulls hold this position or did they exit? That is what we want to find out. So after 125, I'm going to change the timer. We are already at 125. I'm going to put the end of the day. What the hell happened here? In the last 2 hours, 125 to 330, 130 to 330, every bloody people who came in the market, they all exited. You can understand the game here. What did the price do? What did the price do? It was dead sideways. Hardly 60 points, 50 to 60 points. Sideways range completely. Everybody got liquidated. Entire bulls, they left the market. Those who came the day, not a single one. One small fellow was standing here, but everyone else, entire liquidation. This is 90 lakh OI got removed in the intraday. The last 2 hours, price did not do anything. The funny part, the call OI also left. The call OI, those who came, the call sellers, they also left. So now, if I just turn on the show OI button, you can see that everyone on this 20th Jan on Friday, huge, these empty bars are those who left decrease in OI. Huge selling has come across the board. Everyone left the market on this small range in the this small range here, last 2 hours of Friday. What does this mean? Now, what does this mean? It means that the market here, the bulls are not confident of holding. The bulls are not confident of holding for the weekly expiry. The shorts, they are also not confident of holding their positions throughout the weekly expiry. But once you go to connect with the monthly expiry, you know that slow buildup was there from the put side. So overall, on the monthly expiry, they're expecting a dip or a movement on the upside, but the closest 20th expiry, they're expecting volatility to come. That is why bulls did not commit and bears did not commit. On the last 2 hours, they exited all their buildup. Understand? So this is something new, something for you to learn, something you can track from tomorrow, next day itself in the market. I hope you have learned something new, guys. I'll see you in another video. If you have definitely learned something, leave a like and subscribe. I'll see you in the next video. Till then, take care and be safe.